Hello, my fellow investors. I want to present here a very valuable lesson for value investors on Bill Ackman's Netflix trade. I don't think Netflix or Bill Ackman need any presentation, so let's just get straight to the story. So, back in late January, hedge fund manager Bill Ackman saw Netflix stock price plunge as a $1.1 billion buying opportunity. So Wednesday nosedive with the stock falling 30% in early hours raises the question, is he hunkering down or doubling down? So what was the story? Whatever Ackman's doing, he certainly took a substantial hit following the company's first quarter earning report when Netflix revealed it had lost 200,000 subscribers in the first 3 months of the year and expected to lose 2 million more this quarter. Exactly how big a hit he took is a nebulous number. When Ackman revealed their purchase, he didn't say what he paid, but he did note that he bought more than 3.1 million shares between January 21st and January 26th, when the stock was in the 351 to 409 range. So you don't know the exact number, the exact price he paid for the stock, but we know that he bought it in between these dates at the somewhere in between this price. He later on the next quarter he sold it. So let's just see here. Somewhere over here, this is this chart of Netflix. Somewhere over here he bought the stock. Over here in January, around these days, he bought the stock after it went down from $700 more or less. He bought it around $380, $400, somewhere over here. The next quarter, on somewhere between April 20, somewhere over there, he sold the stock. So he bought over 3.1 million stocks. It's reported that he lost $400 million. So that means he sold the stock for a loss of around $130 per share. Right, 3 million shares. $100 loss per share, which would make it $300 million. 301 million shares, 3.1 million shares would be somewhere around $130 per share he lost. So I was waiting to see what's going to happen afterwards and to analyze this whole story. It was a bit all over the news. Everyone was speaking about it, making fun of him. And I wanted to see, I said, let's wait a few quarters, let's see what's going to happen, and let's analyze this whole thing. So this is the 10K from 2021, and we can see over here the Netflix paid membership and at end period. So all these numbers are in thousands. So in the end of 2021, they had 221 million subscribers, or memberships, the way they call it. And he bought it over here somewhere after, I don't know exactly when he bought it. He bought it in January. So this is more or less what he was seeing. The next quarter, this is the 10K for March 2022. So they Netflix in the last 10Q from March 2022, they reported a loss of 203,000 subscribers. So went down to 221 global memberships. And some over here in April, around April 20, he sold the stock at a loss. What happened afterwards? This is the 10K from June 2022. They reported another loss of almost 1 million subscribers. It went down to 220 million subscribers. And the next tank, this is the last 10Q from September 30, 2022. They gained 2.4 million subscribers. So, it would seem as if this whole trade was a classic buy high, sell low, like a panic trade. Like he sold it because he didn't know what's going on. He didn't like the numbers. He just sold the stock right away after a quarter. He bought it. $400 million loss. He could have waited on. The numbers would have gone bad. Would have gone back up. Everything would have been good. It doesn't fit a great value investor to do such a kind of a mistake because 1 quarter, 2 quarters have bad numbers. He sold the stock. So I actually was trying to look into it. I read his annual letter. Why, when he bought the stock, why he bought it. He praises the company's management. He explains everything why he likes the stock. Okay, very nice and good. What was the reason he sold it? And I think this is a very, very valuable lesson for value investors. And I think that's why he's such a great investor, Bill Ackman. So this is his letter to the shareholders on why he sold the stock. So this is from April 20, 2022. Dear Pershing Square investors, today we sold our investment in Netflix. And he continued on to explain why he sold it. While we have a high regard for Netflix management and the remarkable company they have built, in light of the enormous operating leverage inherent in the company's business model, changes in the company's future subscriber growth can have an outsized impact on our estimate intrinsic value. In our original analysis, we viewed this operating leverage favorably due to our long-term growth expectations for the company. Yesterday, in response to continued disappointing customer subscriber growth, Netflix announced that it would modify its subscription-only model to be more aggressive in going after non-paying customers and to incorporate advertising, an approach that management estimates will take 1 to 2 years to implement. While we believe these business models changes are sensible, it is extremely difficult to predict the impact of the company's long-term subscriber growth, future revenues, operating margins, and capital intensity. We require a high degree of predictability in the business in which we invest due to the highly concentrated nature of our portfolio. While Netflix business is fundamentally simple to understand, in light of recent events, we have lost confidence in our ability to predict the company's future prospects with sufficient degree of certainty. Based on management's track record, we would not be surprised to see Netflix continue to be a highly successful company and an excellent investment from its current market value. That said, we believe the dispersion of outcomes has widened to a sufficient large extent that is challenging for the company to meet our requirements for core holdings. So I think this is a major important lesson for value investors. He doesn't say that he lost faith in the company's management. He doesn't say he thinks the company's outcome will change. He has no problem with what the management is doing. His problem is that he requires a high degree of predictability. And he sees that he can't predict the company's future the way he thought he could in the beginning. So basically what he's saying is, we thought we understood the company. We thought we understood the industry. And that's what we based our investment upon. Now that we see that we can't predict the company's future and we can't predict the future of the industry, whatever it is, he's selling his stake in the company. And I think this is very important for value investors to understand. You have to know what you're getting into. And if something changes in the future, doesn't mean anything. If you think you're wrong, then get out of your whatever you bought, if it's long or short, whatever it is. That's the mistake. Wasn't that the company lost membership subscribers. The mistake was in his viewpoint that he didn't understand the company the way he thought he understood it. And if he didn't understand the company the way he thought he understood it, then he sold his stake in the company. If he would have thought that he understood the company right, he wouldn't have cared if the company's memberships went down. That's not the issue. The issue is he thought he understood it, and now he sees that he doesn't understand the company. And I think that's a very important value lesson for value investors to understand. It's not what the company goes up or goes down, if the stock goes up or goes down, if the numbers are good or if the numbers are bad. If you thought you understood something and you see you didn't understand it, then get out of it. It's not why you got into it the first time. Basically, when a value investor gets into a position and he sees he didn't understand the position the way he thought he understood it in the beginning, if he continues to hold his position in that investment, he's turning himself from a value investor into a speculator. A value investor buys value. And as long as he sees the value in the investment, okay, so you're value investing. But if you don't understand what you're doing anymore, so now you're turning into a speculator. And that's what great value investors do. When they realize they made a mistake, they get out right away. Maybe they could make a lot of money waiting another quarter or two. That's not the issue. He says himself that he believes the company will be a great company in the future. His mistake was, I didn't understand the company, I'm getting out of this position. I think that's a great, very, very important lesson for value investors. Thank you very much and hope you enjoyed this video. Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.